Okay, we're all good. Okay, so Assalamu alaikum, and I mean, in this session of the Cardus Roundtable, we're going to be discussing a topic that's on everyone's minds at the moment, and it's basically, are cryptocurrencies halal? And we have two, I mean, great references when it comes to cryptocurrencies and whether they're halal. We've got Daniel Ahmed, one of the co-founders of Facet, and we've got Mufti Faraz Adam, who's a Sharia advisor to many fintechs, including Cardus, but is also a Sharia advisor to Facet. So, I mean, the main objective of this Cardus Roundtable is basically to discuss, first of all, what are cryptocurrencies and what are the different ways to invest in cryptocurrencies. And then we'll start digging further into what makes a cryptocurrency halal. And then I'm sure we've got lots of questions. I'm sure I have on the topic. So then we can discuss that in more detail. But if you can begin, please, Daniel and Mufti Faraz, with just a brief introduction.
Absolutely. Mufti, after you, please.
Introduction of ourselves or of crypto?
Yeah, let's start with a brief introduction of yourselves, please.
No, I think you pretty much summarized everything neatly in one sentence. But yeah, in regards to this topic, I've been researching and studying digital assets for almost now 10 years. It was actually my thesis in my master's degree, right, in 2015.
Okay.
And now it seems like a long time ago, but my background is in Sharia studies, and I'm the founder of Amana Advisors, a global Sharia advisory firm. But insofar as this topic is concerned, I've always been researching, reviewing, and working with firms like Facet who are at the cutting edge, I would say, of digital assets.
Yeah. Okay, great. And Daniel, if you could tell us more about yourself and about Facet as well, please.
Absolutely. Assalamu alaikum, everybody. Good to see a lot of participation. Hopefully, we can shed some light, inshallah, and answer any questions as well. It's funny, Mufti Saab, you're saying that your thesis was around crypto. My thesis was around Islamic finance, actually. So I'm originally from London. I grew up there. I live in Dubai now. And while I was at university, I discovered what Islamic finance is. So I ended up becoming one of the founders of something called the Islamic Finance and Ethics Society in London. It was a university body out of King's College, SOAS, LSE, Oxford, Cambridge, a bunch of universities. We were just trying to, really, it was just for us to try to understand Islamic finance and, maybe try to get a foot in the door of getting into the industry. We're all Muslims by background, and we were all interested in technology and finance. And then somehow found myself in Dubai and have co-founded a company called Facet, as Mufti Saab was saying. We are building a Sharia compliant platform for crypto assets, very broadly speaking. So we have an app where customers, especially in emerging market contexts, can enter, buy and sell, swap, send, receive different types of digital assets. All, at least from our understanding and from the work that we do in Mufti Faraz, deemed to be Sharia compliant, which we'll go into and talk about. So traditional crypto assets like Bitcoin and Ethereum that people have heard of, but also tokenized real world assets. So we have a lot of assets on the platform that are connected to the real world. And when we say tokenization, what we really mean here is taking a asset that exists physically in the real world and effectively creating a token representation of that using the blockchain, which we'll, I'm sure, talk about shortly as well. And the idea there is that once you've tokenized an asset, it becomes there's many interesting things you can do with that. One of them is that it becomes more accessible to people. You can also fragment down the cost of entering into an asset by tokenizing an asset as well. And that's kind of in a core, what we do. Our thesis is that crypto assets and tokenized reward assets are a need in emerging markets. So if we look at the hundreds and hundreds of millions of people that are underbanked, um, tokenized assets, digital assets present an opportunity for them to get into financial services. Obviously, we're all from the UK, and I assume a lot of your audience is from the UK. We're lucky, right? We have banking rails, we have savings products. Mashallah, over the last 10 years after I've left London, the amount of Islamic fintechs and Islamic finance companies has exploded. So there's a lot of opportunity for us to get into different asset classes, but that doesn't exist for the majority of people globally, and that's kind of what we're trying to build with Facet.
Okay. Great stuff. So I mean, you started discussing towards the end, Daniel, around cryptocurrency. So if you could go a step back and discuss, for example, the blockchain, then give some idea to our listeners on the different types of cryptocurrencies, all the way from Bitcoin to stable coins, CBDCs, NFTs, and all that kind of thing, basically.
Absolutely. Um, I just want to say again before we started this call, I did say that Mufti Faraz is the expert here, so I will be listening to him more than adding my points. But I'll quickly just jump in and talk a little bit about what crypto is. So,
Yeah.
cryptocurrencies is effectively a technology, right? It's based on something called the blockchain. I assume the audience will understand it, but very kind of high level. The advent of blockchain technology really came about with the advent of Bitcoin. Bitcoin is a very interesting asset. It has multiple use cases, but underlying the Bitcoin asset is something called the Bitcoin protocol or the Bitcoin blockchain. What that really is, I like to use this analogy when I'm describing blockchain just to make it easy for people to understand, is that if you think about Excel and you think about Google Sheets, okay, really it's a ledger where people are recording transactions. On an Excel, it's centralized. It's on your own system. On a Google Sheet, it's actually, you can make it public. Everybody can have a look at it. Everybody can see the transactions that are running on it. So really in a sentence or in a phrase, the blockchain is meant to be a trustless ledger. It's meant to be a ledger to record transactions. And what that then enables you to do is effectively assign value to people and then that value can be sent basically so I can send you Bitcoin, for example, and that's recorded on the ledger.
Okay.
That's basically in a very high level nutshell what the blockchain is. Now, cryptocurrency is a very broad term, right? You have, as you mentioned earlier, everything from stable coins to tokenized assets to traditional crypto assets to decentralized finance and DeFi assets. And so each one of these has use cases. Each one of them has some use cases that are haram, some use cases, and a lot of use cases that are halal. And then there's obviously a lot of gray, right? And that's where the debate lies, basically, as to what is permissible and what is not permissible. If you want, we can go through each asset that you mentioned, or maybe Mufti Faz, if you want to add anything there as well, and then we can.
Yeah, no, I think you summed it up really well. I would say one more thing about blockchain, which makes it really interesting, is blockchain, in addition to being a ledger, right, it's actually like a virtual computer, right? You can put code into these tokens and then run it on. So you get smart contracts, for instance. You're running a piece of code. So here it's that's why the EVM, the Ethereum virtual machine, it's actually a computer plus ledger as a software. Previously, you had hardware running software. Up here is software running software. So you've changed the entire dynamics because now running programs is no longer restricted to one device. And that's where the power is in decentralization, blockchain, and this entire thing. So that's one, I think, key thing which makes blockchain really interesting as far as technological innovations are concerned. But then with digital assets, this is one thing I'd like to also point out is the word cryptocurrency is like a misnomer. I don't really like, and even at Facet, for instance, we don't really typically use the word cryptocurrency because for the most part, these are digital assets, are not functioning as currencies. So when we say, and I noticed this in the late, I would say, well, 2017, 2018, 2019,
Yeah.
when Bitcoin was taking really headlines everywhere and the debate really came to the fore, whether it's Sharia compliant or not. Just because the term was cryptocurrency, many people were hesitant in dealing and engaging with the idea because ideas are shaped by labels, right? So
Yeah.
you see the word cryptocurrency immediately rings alarm bells. Like currencies are, things which are government approved and so on and so forth in an infrastructure that we have. What's a cryptocurrency? This looks like it's a hidden form of currency. Does that open up the doors to some kind of laundering or, illicit use? Whereas really, if you look at the crypto industry or the digital assets industry, majority of digital assets have use cases just beyond currency, those which do have a valid use case. They don't just function as a payment system. There's much more to it. And that's
Okay.
why I think it's important just reframing that in our minds, that it's more than just a currency that we're talking about. It's an entire universe of value exchange.
Yeah. And from a security perspective, what are your thoughts on that? I mean, there's a lot of talk right now about the ability of quantum computers to decipher or to basically be able to decipher encryptions and that kind of thing. I mean, what are your thoughts on that in general? I mean, it's a topic that's starting to come up as more and more as the technology evolves, as computers evolve as well. So, so yeah, what are your thoughts on that? Because that comes down to trust as well, right? Like, do I trust the system to actually, when it comes to investing, to invest money into it without, for example, my cryptos or my Bitcoin or whatever that is being stolen out of my online wallet or anything like that. So it'd be good
I
to
would
understand.
just say, before Daniel comes in here, I would just say this creates an opportunity for entrepreneurs, founders, and thinkers to create systems which also then provide that security, right? So there's a whole new market opening of quantum security, really.
Yeah.
And so humans are incentivized by opportunities, and there's a natural balance between the forces of evil and good, right? So if those who are trying to hack, automatically there'll be people who will be incentivized to create a response to that and create product services, which obviously they'll monetize and benefit from. But at the same time, it provides services to thousands and millions of users. So there'll always be some kind of counter force, and the world will continue to move on, as we always see in the different kind of dynamics that we experience.
Yeah. Hassan, just to add, I just want to go back just one question very quickly, and then I'll get to this as well.
Yeah.
Crypto assets, cryptocurrencies, whatever you want to call them, they're multifaceted in nature. That's partly why we're called facet as well, right? So you can do multiple things with a Bitcoin or with a tokenized asset. It's not just use as a currency, which some people do use as a currency, but it's not the main use case. Especially in the case of Bitcoin, it's actually a store of value that people invest into. Then you have stable coins, which are one-to-one backed with real world currency in a bank account. Those are more used for payments, but each one of these assets can be very uh, there's a lot of different utility that you can get from it. And coming back to the initial point that Mufti Faraz was saying about the programmability of these crypto assets, it becomes very interesting what you can do in terms of new products that you can launch on top of that as well. Coming back to your question around security and quantum computing, I think Mufti Faraz answered it well. I think there's when it comes to anything digital, obviously there's many vectors of attack, right? So even before you get to quantum, people lose their, pass keys. They don't, they're unable to get access to the assets sometimes. Maybe they send the funds to the wrong place. So actually it's a lot about education and helping people understand how these assets should be used and kept safe. From a quantum computing perspective, if that does end up happening, by the way, then the entire world will lose all encryption, which means that nothing will be safe. So I think that's a doomsday scenario. I don't think that is something that necessarily is something that will happen or we should be concerned about necessarily today.
Yeah, I agree with that. I mean, a quantum computer would then, in theory, be able to hack into our bank accounts as well, and nothing is safe. So, probably that's a question that should be addressed not only in this space but in other spaces as well. So when it comes to, for example, the different types, right? You've got Bitcoin, you've got Ethereum, you've got some that have got a very clear use case. For example, for me, it comes down to real world tokenization. I'm very interested in that, even when it comes to Cardis, because uh, we're looking at what we do, which is SME finance, and we're starting to think, okay, how does this apply to what we do? Because we use a lot of intermediaries as well, right? When it comes to financing, and how can we remove all the frictions to create a more a frictionless intermediation cycle, if you want to call it that, right? So I mean. What are your thoughts on these different types? Obviously, we'll discuss the Sharia compliant aspects, but now there's also talk about CBDCs, stable coins. I mean, stable coins to me seem probably CBDCs and stable coins seem the most political, uh, especially when you look at, I was just speaking to Mufti Faraz before this call. When you look at stable coins, right? Stable coins are quickly becoming, they're going up the table when it comes to becoming a holder of US debt. And today you have $8 trillion of US debt that needs to be refinanced this year in 2025. And I just see quite a high correlation between the lack of buyers of US debt in the market with everything that's happening right now around trade barriers and everything. and stablecoin quickly going up the ranks in terms of building out infrastructure so they could take on more and more of that US debt. So I mean, yeah, just as an economist, I think there's a lot of risk emanating from stable coins, from that aspect, as well as when it comes to auditing what's actually on their books. So I mean, I've just pitched a lot of ideas, but if you could put these cryptocurrencies maybe into verticals, or try to divide them into verticals, so we could differentiate between them. And then when we go into discussing halal and haram, we could maybe touch on these as well and see how Sharia compliance also changes between these different, let's call them uh, uh, asset classes or subcategories of this asset class.
First, maybe I can suggest, if Hassan's saying that we split these up, maybe we go from really centralized to decentralized. Okay, so
Yeah.
the most centralized out of these 5, 6 that you mentioned probably would be CBDCs, right? So maybe we can touch base on that very quickly and then go down from there. I mean, CBDCs, at least for example, from my perspective, are just um, uh, what is already happening when it comes to currency, right? All of our payments are done practically online. The amount of cash that we all use is declining day by day. A CBDC would just be an equivalent of that, but done on a private blockchain, or a blockchain that is controlled by government. It would have more interoperability with other tokenized assets like stablecoins. And so that would be the kind of innovation, let's say. So you could potentially go from USDT to, Great British Pound that is tokenized, as an example. But aside from that, when it comes to questions around halal, haram, I mean, it's effectively a government currency at that point. So it's same conversations around that. Again, from my perspective, I don't know, Mufti Firas, if you have any thoughts on CBDCs in particular.
I mean, the Bank of England actually released a bulletin, perhaps over a year ago now, just inviting consultation and thoughts on CBDCs and if the UK was to launch a CBDC. And it was interesting just reading the responses and the commentary around it from practitioners. I mean, the perhaps the most the common question I was raised was, what's the benefit of this for the UK at the moment? Like, what value add is in having a CBDC really? If this, we're using, as you mentioned, exactly right now, we're using electronic money anyway. But what added benefit is there? Then there were some observations and questions about privacy, control on money, and these types of thoughts were then raised also. But yeah, I guess the utility, is there any added value or benefit for a country like the UK having a CBDC? That's a separate conversation. But we are seeing experiments across the world now, or at least thought papers being released on this question mark. But effectively, it's exactly that. It's just another another step in the fiat kind of world that we live in. That's all it is.
Yeah, and I think just to add further to that, Mufraz, you mentioned something about control there. I think obviously, even in the advent of going from cash to e-money, there's more visibility on where money is going from governments and government-related entities. I think with CBDCs, it would be even more control, and you can then track exactly where funds are going. So in some cases, there's pros and cons there, right? Some people would be very happy with that because then you can stop illicit flows of money. But at the same time, you're giving up any type of freedom, let's say, to do what you want to do with your money, basically. So that's kind of CBDCs. Maybe we can go down to our, real world assets, because that's again, it's more centralized because you're talking about real assets, and this is a fusion of Web 2, Web 3. So it's crypto and blockchain, but it requires, real world kind of either assets, whether it's real estate, or stocks, bonds, sukuk, whatever it is. So you need real legal structures behind it to actually tokenize an asset and then bring it to market. Maybe we can discuss the permissibility of tokenized RWA. Mufti Raz, I don't know if you want to take that, and then I can add more.
I mean, when it comes to tokenization, so you're looking at a real world asset. So the same kind of Sharia screening that we do on real world assets would apply. But an additional step would be the process of tokenization. So there are many tokenization platforms are out there. What protocol is being used? What's the kind of like governance, the regulation of that? How are we pairing the token to the actual asset? That's key.
Okay.
Because sometimes there's a possibility a token can function as a pure derivative where there's no ownership rights being granted to a token holder. And so that's a concern at times. It shouldn't be that your token is simply acting as a derivative of an actual real world. And that's why what Daniel just mentioned about the legal side. Typically, these assets are held in trust in an SPV, for instance, and therefore the tokens are issued against that.
Yeah.
And so when you own a token, you're holding a share in a company which actually owns the asset. So that link is extremely important for Sharia compliance purposes. And then, of course, making sure that the returns and everything are tracked, and the activities of the RWA is Sharia compliant. Those are the key things that we do. Now, then it'll be depending upon the asset class, whether it's shares or sukuk, or real estate, whatever it may be. Every asset class would have its own kind of governance and Sharia requirements, as we see in the real world today.
Okay. Okay. Uh, okay.
Yeah.
So if I touched on that a bit, Mufti, so essentially, let's say we start with Bitcoin, right? There's a lot of talk around Bitcoin being, I mean, comparing Bitcoin to gold. Okay. So let's go back in time and you've just got the white paper on Bitcoin, right? And you're analyzing it and no one's looked at it yet, and you, you don't have any other Sharia views. Let's say you're looking at this on an absolute basis, right? And you're reviewing this. What could you take us through the process of how you'd go about determining whether this is halal or haram when it comes to Bitcoin to begin with?
Yeah, very, very good. So the legal kind of Sharia analysis that takes place, it's like a legal analysis. Just recently, it was the in the UK, there was a bill that was a report that was released on how lawyers are looking at crypto and digital assets. It was a very interesting read as well. And so all legal systems have a methodology and a framework in analyzing anything because rights obligations are dependent upon the analysis in the world that we live. So as a student of knowledge, approaching Bitcoin, the white paper, seeing it for the first time, you're immediately looking at, okay, what is this thing? What is it? Right? That's the first question. That what is this thing that we're dealing with? Is it something which exists, doesn't exist? Is it real? What are the benefits? Does it cause harm? Is it used in a beneficial way? Does it can it be qualified? One of the first questions that scholars would ask then is this really something called mal? Mal means like property. Is it valid property or not? What makes something property? Well, from a Sharia perspective, something becomes property when it's retrievable. It has its own independent existence. It's existing independently. It's not a claim on somebody's, liability or balance sheet. It's actually an independent asset. And that's really important because we're not allowed to trade claims. And that's the problem with today's financial system where it's just based on, stack of cards, stack of debt, right? That's all it is. So really we want assets which exist independently. And on top of that, there's some utility and benefit in it.
Yeah.
And utility and benefit is perhaps a driving force behind everything. When anything has utility and benefit, from a Sharia perspective, it typically becomes permissible. Because why is that the case? Everything to do with trading, Allah has created all assets in the world for our benefit, for the worldly benefit. It's got nothing to do with the hereafter, it's for the world, so you can fulfill your needs in a permissible way. With that being said, majority of the things here are permissible, and the default rule is permissibility when it comes to worldly things. So you have to have a very strong evidence to say something is impermissible. And that's why impermissible matters are really a very small percentage when it comes to trading. If you look at it, right, there's very few things that are impermissible and majority are permissible. So you're always starting with a blank canvas in a position where, okay, this is permissible as long as I don't find something impermissible. And so that activity then goes, okay, once you've looked at all the benefits, harms, what the thing is itself, you've analyzed, that's when you potentially reach a draft conclusion, so to speak, saying, I feel X is permissible or impermissible based on this rationale. Or certain scholars would even say, I don't know. It's too fast. It's evolving and fast paced. I just suspend any comment right now, and I'll come to a conclusion later on when I have more insight on the matter. So these are the different typical trends that you see.
So if we apply this methodology, the thought process, for example, to begin with on Bitcoin,
Mhm.
how would we apply this thought process on Bitcoin and in deriving permissibility, basically?
Yeah. So as far as Bitcoin is concerned, we look at, okay, what is Bitcoin? It's a ledger entry.
Okay.
Does it, so the first question that is asked is, well, is this then something which is known as mal? Right? How can we prove Bitcoin to be mal? Well, it exists on a ledger. It's a balance, it's an entry on a ledger as far as we're concerned. It exists on that ledger. It's not a claim on somebody else. It's not a claim against anybody. So there's a blockchain, there's a ledger. You have a claim on that, or you have a ownership. Your token links you to that entry.
Yeah.
Then the question is, does it have what's known as in Arabic, ميلان or ما يميل إليه الطبع, which is for something to be mal and property, people should have a desire for that thing, and that desire is generated from utility. So does Bitcoin have utility is the next question. Well, if you look at it, Bitcoin is used in several countries. For somebody in Africa, for instance, Bitcoin is a savior for them. Why? Because of hyperinflation. Bitcoin becomes the best asset for them to have. Or in terms of remittance, somebody wants to send money from somewhere in South America to somewhere, let's say in Asia.
Yeah.
Bitcoin provides a very fastless, seamless experience to remit that amount. Or it can be savings for another person in an emerging market where, again, there's no ability to save because of inflation. Bitcoin becomes the means of saving their own wealth and making their sweat keep its value. So Bitcoin serves multiple needs. It has people are buying Bitcoin for multiple reasons, and there'll be other countries and other parts of the world who just simply want another mechanism to make a payment, like El Salvador, for instance. Right? There's many um, documentaries or clips on YouTube where people are going and buying things in El Salvador with Bitcoin, right? So that's something to look at.
Yeah.
So
Yeah.
there's real use case in the world and adoption in different parts. And so that's another thing that we take into consideration. At the same time, we'd look at the harms. Are there harms? How do we understand? For instance, there's multiple questions raised on, like some scholars initially raised the question whether something exists or doesn't exist. There were scholars saying that there's no such thing as Bitcoin. Nothing exists. It's all digital.
Yeah.
But the problem with that is if you go down that line of argument, then what about everything else that's digital? Or what's this? What are we doing here today? What's a PDF file? What's data? What's storage? All of this goes into a question. So the world today is very different. The digital space actually exists as far as we're concerned. And to use the physical realm as a principle to govern the digital realm perhaps is not the best fit, right? Because what we can do digitally is perhaps for us, this is real. Like Daniel sat in Dubai. You're probably in London. I'm here in Leicester. But this is a real conversation happening in real time.
Yeah. Yeah. Yeah.
So that's the conversation scholars were having and discussing. Other scholars were well saying there's a risk. What's the risk? Certain risks were posed. For instance, money laundering or using Bitcoin for unlawful activity in the world. But that also happens with every fiat currency.
Yeah. Yeah.
So that's an extrinsic factor. So when we're analyzing, there are intrinsic factors and extrinsic factors. So something doesn't become impermissible because of an extrinsic factor. That's down to the way people use that particular thing. So people use dollars and other currencies also for illegal things. But the dollar doesn't become impermissible because of that use case. And then there was another issue, which was, well, this comes out back to the cryptocurrency stuff. People were saying, well, only the government has the right to issue a currency. But then we're not calling this a currency. This can be, you can use a medium of exchange or a means of payment, which is not a currency legally, but it's still accepted by a counterparty.
Yeah.
That's fine. It's not a legal tender,
Mm.
but it's still a means of payment.
Yeah.
So that's where, again, it's an extrinsic matter. So these were the debates that were actually happening and are still continuing to happen.
Yeah. 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 Very, very interesting.
Maybe I can jump in very quickly.
Yeah, go ahead, Daniel.
Yeah, sorry. So I was just looking at your question Q&A as well. Those two questions that Mufti Fazli kind of touched on as well that I just want to add a bit of light to. One was around this concept of physical versus digital. Bitcoin, I can't see it, I can't feel it, so therefore it doesn't exist. I think one of your one of the attendees has said that, you can't stuff Bitcoin under the mattress, for example, therefore it doesn't exist. But I think there's a misconception there that, for it to be real, it has to be, physically there, right? So I think that's what Mufti Firas was saying. The second question is an interesting one, which I want to go into, which is about what is the foundation of Bitcoin? How can it be considered as backed by some asset? So just very quickly, I just want to talk about a little bit more about how a Bitcoin comes to creation, right? And the process of that, and that kind of hopefully will add some light. So there's the way the technology works, or the way the technology works, and the way that this ledger that I was telling you about earlier maintains its integrity is through a process that is called mining, which some people may have heard of before. That mining is technically what is backing this Bitcoin. What mining is effectively real computers in the world, GPUs and CPUs, that are running actively, consistently, constantly, 24/7, that are constantly solving certain cryptographic puzzles, right? And those puzzles are effectively how the Bitcoin blockchain is safeguarded. It's also how Bitcoin is created. So that is something that's called proof of work. So actually what is backing Bitcoin is proof of work. And if I just keep going down kind of to first principles, that proof of work is what this mining process is. And really it's electricity and energy that is being used physically. And if you want to go back all the way to the physical realm, that is leading to a creation of a Bitcoin, effectively. So some people say actually Bitcoin is backed by energy, right? So that's one way to think about it. But there's many other ways to cut that. But I just wanted to add some light there to help people understand that it's not just made up, because there are crypto assets and crypto tokens and cryptocurrencies that are made just off, with some code that have absolutely zero backing. I mean, I was going down the list of decentralized, from centralized to decentralized, meme coins and meme tokens, and a lot of assets do exist, and I would say 95% of crypto, unfortunately, is full of this stuff, which is, and that's when the debate around halal haram becomes a little bit more easier for people, for us to say that it's not permissible. But Bitcoin is different, basically.
Okay. Um, Okay, so from a Sharia aspect, like if we're to add a layer to this, right, and discuss other aspects such as, for example, volatility, right? Like there were discussions, I think, in Indonesia around the speculative aspects of Bitcoin and linking that to halal and haram, basically. But if we were to look at Bitcoin, for example, as like I was reading last time that Bitcoin's got a high positive correlation with the Mag 7 stocks, the Magnificent 7 stocks. And how does this impact it as a store of value? So I mean, it'll be good to understand, for example, the Sharia, how the Sharia views volatility in an asset class such as Bitcoin, or is there some way of quantifying that into? So we're comparing again gold to Bitcoin, right? Gold has got a low standard deviation, and Bitcoin has got a high standard deviation. It's probably going to have a lower standard deviation as it gets more institutionalized, because liquidity starts to create this backstop underneath it. So it'd be good to understand that aspect, because it was brought up in Indonesia, and I found that very interesting, because we can probably link that, Mufti, to what you just mentioned about it not being a currency but being an asset. Because a
Yes,
currency's got a currency's got different characteristics, right, than an asset.
that's right. I mean, look, the volatility question from a Sharia perspective, there was a stat that I read, and Hassan, you might probably be able to help me with this stat. It was like on Embroker or something in the UK, where 90% of startups fail in the first 2 years or something, right? So if you're startup investing, the volatility and risk in that is right extremely high. But these things don't make something permissible, right? It's all based on the fundamentals, and what you're investing in is the key point. The volatility comes from multiple factors. Yes, market dynamics. Yes, manipulation. Yes, other things as well. But as far as Sharia is concerned, those are commercial economic dynamics where Sharia has guidelines for that as well.
Yeah.
Right? That you shouldn't be manipulating, you shouldn't be doing pumping and dumping, you shouldn't be creating garbage coins. You should be doing things which actually have benefit and value. That's as far as volatility is concerned. Speculation now. See, what is speculation? Speculation is simply the act of guessing or making an assumption about something, right? Where there's no information. You're just taking a guess. And all investments and business activity is speculative by inherently is speculative. If you're running a business, you don't know what's going to happen tomorrow. You're making an assumption, you're making a guess, it might be a calculated decision as well, but it's speculative. That's why in insurance law, you have speculative risk and you have pure risk. Insurance only covers pure risk, not speculative risk. That's why you can't cover business in terms of profitability with insurance. It doesn't cover speculative risk. So speculation is not the same as gharar in Sharia. Gharar refers to contractual obligations being contingent. That's the key thing about gharar. So will I pay you or not pay you? That's contingent upon the weather tomorrow, for instance. Or it's based upon the price of Bitcoin tomorrow. Only then I'll pay you. If the Bitcoin is favorable it's in my favor, I'll pay you. That's gharar, and that's uncertainty from a Sharia perspective, which is impermissible. Speculation is not that. Speculation is a commercial, business, economic thing where people are speculating. The only time, perhaps, where you'd look at this in speculative activities when a person is perhaps speculating using all their wealth, or they are overlooking obligations, their dependents, perhaps, and then they are putting all their money into Bitcoin. Somebody's come and said to them, Bitcoin is going up, or this meme coin, like we've seen so many times, this coin tomorrow is going to go up 100x, 200x.
Yeah.
Invest now. So he takes all his money out, he puts everything in there, and he has no funds or very little funds to fulfill the obligations of his family that he has upon him. That's when that activity and behavior is problematic, and greed is overtaking now. So that's more to do with the person and his activity, again, as opposed to the actual asset class
Okay.
itself.
So the ruling in Indonesia was, what was it based on?
So they see in Sharia rulings sometimes are based on the fundamentals of a thing, and many a times they're not based on fundamentals. We call the fundamentals the qiyas, like the rule of the law.
Mm.
The law has a logic. So if you're basing a law, like if they don't have an issue with Bitcoin being an asset and everything, but they have an issue with volatility being speculation or these types of things, or too much risk to their population, that's like what we call istihsan. They are look, it's a fatwa where they want to protect the welfare of their people. They feel that this is not in our best interest of our people right now, and therefore our advice or our fatwa would be stay away from this. But
Yeah.
it's not looking at the fundamental. It's more of a kind of like in their maslaha, it's for the benefit.
Maslaha. Yeah.
That's what it is. That's
Okay.
what the fatwa would be based upon,
Okay.
effectively.
Okay. Okay. Okay.
Awesome. Just very quickly coming back to what you were saying about Bitcoin being a risk asset and the standard deviation point, just very quickly wanted to touch base on that as well. So I think Bitcoin does, like you said, there's a lot of correlation with the Mag 7, right? And that's because in the short term, it is still considered a risk asset, right? So people view it as a risky asset. In the long run, however, and if you look at the best performing asset class in the last 10 years, has been Bitcoin. And if you look at how Bitcoin has performed versus the dollar and how it will continue to perform versus the dollar, I mean, the dollar is losing value against Bitcoin, right? The Bitcoin is very interesting as well. It's the only asset class that is verifiably known to us that is finite in nature. Even gold every year increases by 2% supply. Oil, every year we find new oil, right? But Bitcoin inherently will only ever have 21 million tokens. And that is baked into the way it's been set up, right? So it is a finite asset. So over a longer period of time, I think there is a store of value concept, as you rightfully said, as more and more institutional investors come in, liquidity will dry out, and therefore there won't be price fluctuation like it takes place. Even now, Bitcoin is there's been a lot of stuff in the crypto space over the last couple of months, and Bitcoin's held very strong because there's a lot of ETFs and a lot of institutions that are starting to buy Bitcoin as well.
Yeah. I mean, it's a very good point. What are your thoughts as well, just from a Maqasid Sharia perspective, on the environmental impact, for example? Like when it comes to environmental impact, I mean, that's probably a problem for comparing it to gold again. It's probably a problem with gold as well, right? Because you're mining in the ground and that's creating something. But there's been a lot of talk around how Bitcoin mining is contributing to global warming, basically. So how does that link into Maqasid al-Sharia and how, yeah, what's the Sharia view on that?
You know, on this, right, there was a KPMG issued a report in 2023 or 2024 on which actually challenges this entire concept whether Bitcoin is really harmful for the environment, and in fact how it was ESG friendly and how it supported sustainability, because Bitcoin now is acting as this mining operations are increasingly using renewable energy sources. That's the
Yeah,
first thing.
yeah,
Secondly, they had in that report they showed how actually Bitcoin is being used as a stabilizer for the grid, where there's excess energy, Bitcoin is coming and stabilizing, and when there's less energy, Bitcoin mining doesn't take place. So Bitcoin is actually beneficial. And there's comparisons between Bitcoin and other activities that we do, which are even more harmful. So it's all relative, and the debate carries on. So KPMG's kind of research is really insightful. Likewise, Cambridge, there was a research done in Cambridge on the actual energy output of Bitcoin. And what was assumed was revised, and it's much less than what was initially thought. So this energy thing and it's a very relative discussion. Everything has a benefit and a harm. It's all relative, and I'm sure many other activities, like just there was some activity about watching YouTube, the electricity use, because this is not like immediate. This is all about electricity usage.
mm,
Bitcoin itself is all based on the electricity usage. That's where the debate comes. So we use more electricity in other activities than Bitcoin.
yeah, 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 yeah.
Just to add to what Mustafa was saying, so the people that are enabling Bitcoin mining are always looking for the cheapest form of energy, right? At any given point. And usually the cheapest form of energy is when there's excess energy, right, in the grid. So actually a lot of that excess energy would be wasted. So it's being used. And then as Mustafa said, a lot of it is now moving towards sustainable and renewable energy as well, because it's cheap actually. Like for example, solar is incredibly cheap in certain markets.
Yeah, makes sense. Makes sense. Makes sense. Okay. One final question about Bitcoin. I mean, JP Morgan actually came out with a report and where they questioned that that's probably to Daniel, where they questioned that 21 million ceiling. And I mean, I remember reading something about you're really going to need to reboot the system or bring everyone involved to be able to take it above 21 million. But what are your thoughts on that?
As in, could it ever increase beyond 21 million, you mean?
Yeah.
Yeah, I mean, obviously, it would need consensus, which is ironic because that's something that we speak about in Islamic finance. But you need over 51%, I think, of the capacity to make that change happen. And I don't think that that would ever happen. There is mechanisms that beyond the 21 million when it's mined, and I believe the estimate is somewhere in the year 2140 or something like that. That there would be other ways to incentivize the the running of these nodes to ensure that that the Bitcoin blockchain continues. And I mean that comes from the gas fees. So another thing associated with crypto assets is that there's usually a fee that you pay to make a transfer using the blockchain. So, but yeah, from my knowledge, I don't think that would be something that would happen.
Yeah, 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 yeah. I mean, okay, all right, cool, cool, cool. I mean, then we'd need to look at like Bitcoins would have to be concentrate. Like you're going to need to have maybe 10 or 15 the micro strategies piling up, taking out huge portions of Bitcoin, and then maybe then it might become an issue, right? Once you get that concentrated ownership of Bitcoin within a few hands. I mean, just from a price and valuation standpoint, I mean, my background was in valuation, so I'm always looking at this and trying to value, for example, Bitcoin compared to. It's very interesting. I mean, what determines the value of Bitcoin and what determines the price? Obviously, the price is determined by market fundamentals, right? Like if we're applying the same logic to a stock, Apple could be worth, you could run a discounted cash flow method or whatever you want to do and get Apple is worth 2 trillion. And then the price is 3 trillion. Over time, the logic being that the 3 trillion the market will take it back to its value. I just wondered whether you've read anything on what determines the price of Bitcoin, because I mean, it's shot up so quickly. And you have, I mean, some extremes taking it up to $700,000 a Bitcoin. When gold is around 3,000, everyone's talking about this tear in gold and this crazy bullish market when gold is still at 3,400, 3,300 something. So I mean, you just look at these two different classes that are being compared to each other, and one is just so much like when we're looking at exponential growth, like it's a classic a case of hyper exponential growth or whatever. I don't even know there's a word for how quickly that thing has gone up in price.
Yeah, it's an interesting topic. I think you said it quite well, right? Which is that there's a difference between valuation and the market price at any given time, right? So obviously that's purely determined by supply and demand. And then, obviously when, for example, when COVID happened, all risk assets lost a lot of value, including Bitcoin. But then that was short-lived and then everything went up again. I think with Bitcoin, the way I see the value of that, and this is probably not very scientific, like a discounted cash flow method, but it's more around, I think, utility and network effects, right? So as the utility of the network grows, as more and more people come into using Bitcoin for various use cases, the value of that will increase, I think, over time. Again, I think as Mufti said, every asset class and every investment has a portion of it that is speculative in nature. And then, unfortunately, the more potential exponential growth there is, the more speculation there will be as well. So there's definitely a lot of it is driven by speculation, right? Like, we shouldn't shy away from the reality, but that shouldn't mean that the asset class underneath is necessarily haram, right, or impermissible. It's just the nature of what is happening. But that being said, yeah, I think the valuation or the real value of the Bitcoin blockchain, actually the way it's just made is that the more participants that are there, similar to a Facebook or some of the social media platforms.
Yeah.
Twitter and X, or all these names are changing, but they become more valuable when more people come on. Right?
Yeah, definitely.
So that's kind of the way I think about it.
Okay. And in terms of the other the other cryptocurrencies out there, whether it's I mean stable coins seems easy because they're invested in, for example, treasury bills or bonds or whatever. But what are your thoughts on the other types of cryptocurrencies from a halal and haram perspective? And yeah, if you can get an overview of that, because I know a lot of the younger people are interested in these meme coins, and these meme coins are like pump and dump. Uh, uh, um, uh, uh, I mean, penny stocks, if not worse than penny stocks, maybe, or maybe along these lines. But a lot of people are abusing them. A lot of influencers as well are abusing them to get in early. A lot of politicians as well are abusing them, from what I'm reading, which is very interesting. So, yeah, what are your thoughts on these different, cryptocurrencies, basically?
Maybe I can jump in and then I'll pass on to both of us. So, it's interesting. So we also operate in Indonesia, right? So we've met the MUI in Indonesia, and we've spoken about this. And actually, we've been trying to lobby them to look at crypto and Bitcoin in a positive light from a Sharia perspective. As Mufti Faraz said, one of the reasons why Bitcoin was deemed impermissible, or there was a fatwa against Bitcoin, was also partly because Bitcoin was seen as cryptocurrency, right? But the reality is, as we said earlier, there's many different shades here, of one of which are meme coins. So it's more a condemnation of the speculation that is going behind it. And unfortunately, in places like Indonesia and other emerging markets, there's a lot more riskier behavior that is seen by our customers, because they need to make money quickly, unfortunately, right? Because they don't have enough money maybe for kind of day-to-day use. So it's easier to get lured in by a meme token that can give you 100x tomorrow, basically. So that's just an interesting thing that I wanted to mention. Coming back to kind of permissibility of all these other asset classes, I mean, again, there's a lot of debate, right? Even when it comes to meme coins and meme tokens, because there's some debate around there's cultural value behind some of these tokens. There's fan tokens, there's NFTs that represent IP. So there's a whole swathe of different types of assets and different types of tokenization that is going on. And I think as Mufti rightfully said, it's not even about tokenization necessarily. It's about the underlying asset that exists in real world and whether that's permissible. And then the token version of that is a token version of it, basically. If you think about kind of the other major cryptocurrencies that people invest in or have heard of, like Ethereum, Solana, some of these other bigger tokens, they are tokens that are used in the Ethereum blockchain and the Ethereum ecosystem, in the Solana ecosystem. Again, there's speculative investments that people are doing on the basis of that, but that's like really investing into a company, right? Because these are actual revenue generating protocols. There are real people behind them, real foundations behind them, and they're trying to build real products that will have real utility. Now, some of these blockchains may be made for haram industries, right? There might be a blockchain that is literally made for gambling. I don't know if that exists, but I assume that probably does. I wouldn't recommend that we invest in that, right? But if you look at Ethereum as an example, a lot of the tokenized real assets that we're talking about, people are tokenizing on the Ethereum blockchain. So there's actual real utility that is being brought about, and therefore buying Ethereum and holding that as a way to invest into a system that is providing real value and real utility. Again, from my limited understanding, I think that makes sense, right? That we should be allowed to invest in it. I'll pause there. I don't know if you want to add anything before.
Yeah, as something whilst you were speaking, something which you mentioned earlier, and the co-founder of Facet as well, Mohammed Rafi Hussein, again, a great guy to follow on LinkedIn and other platforms, who's a phenomenal leader in this space. He always mentions this, that digital assets is a luxury for us in England and America, for instance, but it's a necessity for people in other parts of the world. And that makes us quite understand why there may be like hyper trading activity in other parts of the world. Because for them, every little counts. Like I met one person right now recently while I was traveling, and he showed me his wallet. We were just discussing, and he showed me his wallet, and he had 300 Tether USDT in his account, right, in his Binance account, and this was for him a big deal. He said, "Look, I'm from this part of the world. I could never have this. My currency is completely all over the place, but look what I have." And this for him was, a treasure chest. Now, for us, that might not be a big deal, but for other people in the world, when you interact and you understand what it means to them, how this is like unlocking opportunity for them, or really giving them some kind of stability in their short to medium term, then we begin to appreciate what this technology can do for other people in the world. And something which Rafi also mentioned is at FASE, what's happening is you're taking the best assets from developed markets and giving access to emerging markets. So it's like almost it's like a corridor. We're taking the best of the best there with a good upside and giving to those people in the emerging markets which don't have access to that. And that's really important. Now, coming back to the issue on different digital assets and types of assets, the simplest way to understand crypto, perhaps the simplest way that I like to explain it is crypto is simply another way of fundraising, right? It's another way for projects and companies to raise money. What do they do in crypto? They sell these digital assets, but the idea is what they are building centrally has value and benefit. And people will need to use this crypto to access those values and benefits that that platform or project has. And the idea is the more value that has, you'll need to use these coins to access that value. And because there's demand in the project itself, there'll be a demand in the token as well. That's exactly the thesis of all these projects. And some of these coins can then be used as gas fees, or it can be used as a payment token, or it can be used as a smart contract to run a smart contract. And people will want to run smart contracts because that platform is appealing. There's more people using it. So they'll want to create decentralized applications on that platform. But to do that, you'll need those tokens. So that's really the entire ecosystem, how it all works.
Mm.
Some assets will, of course, be complete junk where there's no fundamental use case at all. It's just like some meme coins are just there to make you feel good. Yeah, it's just a social club. Yeah, I'm part of this, group of people and we just tweet all day, but it makes me feel good. It gives me a sense of belonging.
Yeah.
That's what I mean. So for that, it's just purely, yeah, it's no underlying value at all. It's just it makes you feel good for a short moment, and that's it. You've used your money. Other digital assets are and can be used in an unlawful way. So there's platforms and protocols which actually allow lending with riba using digital assets. That'll be non-Sharia compliant.
Mm.
There are platforms which give you access to streaming, online streaming services of illicit content that will not be Sharia compliant. So these are examples that exist out there, which we've screened. So at Facet, one thing we do is we screen like digital assets on almost a weekly basis,
Yeah.
looking at what's Sharia compliant, what's not Sharia compliant. So this activity is extremely important because it's not only a Sharia responsibility. Any company in this space has to also think about the financial welfare of their customers. That's also a duty of care that you owe. So you have to firstly make sure it's Sharia compliant. That's your faith responsibility and your values, responsibility. But also your customers. You want to give your users and customers those assets which will actually make them wealthy and make them it's for their own benefit. Just giving every single asset class is not in the interests of users and customers.
Okay. So to summarize, basically, when we're looking at Sharia compliance, we need to evaluate each one of these on a case-by-case basis to determine utility. Obviously, the meme coins, I mean, yeah, that's a big question mark right there, just because of uh, uh, I mean, the lack of utility, right? I mean, belonging to a club or whatever that thing is. But okay, so if we're to discuss just quickly, for example, stable coins, what are your thoughts on stable coins, taking into account that they invest in treasury bills or bonds? I think I mentioned before this call, we are talking about it a bit that, in my opinion, stable coins are a Trojan horse, because they're coming in and they're plugging the gap that's being left in the market for buyers of treasury bills. And they're quickly going up the ranks when you look at the holders of T-bills and T-bonds. They're quickly going up the ranks in terms of becoming one of the major holders of these. And given that they're plumbing the infrastructure of money transfers, for example, or they're taking in greater and greater, uh, there is some utility there, right? But it just feels that the utilities is coming at the expense of something else, uh, which is the inherent stability of these currencies. I mean, they're called stable, right? Which might be an oxymoron, I'm not sure. From one aspect, and from another aspect, we don't really know what's going on the debit side of the balance sheet here, because no one really audits these, and we're going by their word when it comes to what they actually hold and what they don't hold. So yeah, just some thoughts on stablecoin, because I'm personally really interested in how this is suddenly coming up and shoring up the treasury bonds market
Yeah.
in
There's,
particular.
there's different types of stable coins pegged to different things, right? So if we just take, for instance, how you mentioned about Tether and these other types of stable coins, when a person buys a stable coin, they themselves are not getting exposure or they're not owning treasury bills. And that's the key point. So from a Sharia analysis, you'd look at this USDT, what are you actually owning? Now this is deemed to it's pegged one to one, supposedly to your dollar, but it's functioning as a payment system and a means of payment independent of the treasury bills and everything in the ecosystem. And everybody believes that this value is pegged against that, and that's why they have this kind of trust in this and they're using this as a decentralized dollar, or so to speak. That's why, from a Sharia perspective, there will be scholars saying that no, USDT is still, you can use it. Yes, it's a cause of concern and question mark on what's happening in terms of T-bills and everything, as you mentioned, without doubt. But fundamentally, a USDT on its own, it could be Sharia compliant just based on its own fundamentals, as in terms of a property perspective, in terms of its utility perspective. But yes, the company, what they do, that might not be Sharia compliant as a company. So if you were to buy equity, for instance, in one of these companies, that would definitely be something from a Sharia perspective that could be questionable.
Okay.
And just
Well,
to add a few
yeah, go
things.
ahead. Yeah, go ahead.
So two points that you brought up that I think would be interesting to kind of double click on. One is the why stablecoins and why are they important? And I think we need to look at it in the context of everybody in the world, not just kind of you and I, or people who are buying these T-bills, etc. I think in emerging market context, again, a lot of people are converting their local currency into US-backed stablecoins to protect against inflation and to hedge against their local currency. So it's a huge utility for a lot of people globally. The second is that a lot of people actually use stablecoins to do settlements, payments, again, globally, because it's near instant. It doesn't require going through intermediaries like you were talking about earlier. Now, again, that can lead to illicit behavior, but it could also enable a lot of people to do good as well, right? And then we see those two use cases that I just mentioned in the business that we do, right? So from the UAE, we have a lot of SMEs and business clients that actually convert large amounts of dirhams and US dollars into USDT and USDC to make payments globally. And then in terms of in markets like Pakistan, a lot of people buying Tether and Circle just so that they can protect their currencies.
Yes.
There are many types of stablecoins, obviously, right? There are some that pay out interest that they are holding in treasury bills. Of course, that wouldn't be permissible. But then, as Mufti Farah said, the ones that are, the biggest, kind of stablecoins that exist don't pay out any interest. They're just one-to-one backed with the underlying currency. That's the same as holding underlying currency, right? So if I hold dollar or USDT is exactly the same thing in that sense. In terms of auditability, in terms of the regulation around it, in terms of the transparency, I think these currencies have become so systemically important that every single regulator in the world, in particular in Europe and the US, are looking at it with a lot of scrutiny. So there is actually a lot of work that is happening globally to ensure that these assets and these stablecoins are genuinely backed, are regulated, and there's no kind of mismatch here. You mentioned one final thing about buyers of US Treasuries in a market environment where people don't want to buy US Treasuries right now. I think that's an interesting take. I haven't heard that one before. But all I would say is that my understanding is that the US prints $2 to $3 trillion worth of treasuries on a yearly basis, and we're talking about stablecoins not exceeding $200 to $300 billion of overall issuance. So there's still a long way to go before stablecoins are only stablecoin issuers are buying, US treasuries.
Yeah, yeah. I mean, it's definitely growing over time. I mean, I read something that it's projected to be the seventh biggest buyer of T-bills in less than a decade or something like that. So it's growing quite quickly. But okay, so I mean, just a couple of final questions before we wrap things up. I mean, I've got actually a personal question for Cardis, right? I think I discussed it earlier. What would you guys think is the real world when we're looking at real world tokenization? How do you think that would apply to what we're doing in terms of SME finance here at Cardis?
That's a good question. First, you want to take it? Or...
Yeah, I mean, I think there's a possibility of creating some kind of venture, right, with your SMEs and looking at some kind of like tokenization of if you're providing working capital financing, for instance, for inventory, perhaps there's an idea of like tokenizing that inventory and then using that as a means of providing the finance and funding.
Yeah.
That's one way you could do it. Or you can tokenize other things and still provide that kind of funding to the SME. So it just, I guess it's another way to, without having this SPV set up and all these other ways, you can just simply have a token, have it all tokenized on a blockchain.
Okay.
But as
Yeah.
I said, the question really is the cost of using blockchain or the cost of implementing this, is it worth the current kind of thing? Because using blockchain is not always beneficial. It just depends on what you're doing. When you have multiple parties and you need a trustless system, that's when blockchain really comes to the fore. But if you're using in a very close circle, blockchain is not always the answer to everything.
Yeah.
Yeah.
If
From
we're
my side, I think
oh
just
yeah.
very quickly, I think
Yeah.
the benefit that tokenization can bring your business is that actually, if I think about your customers, right, you have a marketplace effectively of SMEs as well as people who want to get access to Sharia compliant investments effectively. If you tokenize it, you can provide accessibility to people that wouldn't be able to access that kind of asset to invest in, right? So if we were to tokenize, let's say, your SME financing vehicles or contracts, we can now sell that to people, Muslims globally, effectively, right? Who
Yeah.
can get access to any crypto asset can now get access also to this tokenized version of this underlying asset. So it's
Yeah.
effectively a securitization. That's what tokenization is. It's a securitization.
Mhm.
It's just digital securitization, and it's interoperable with crypto assets, basically,
Okay.
right? Cryptocurrencies. So, for example, if you were to take, let's say you had a great project that was returning 20% per year, and it's purely Sharia compliant, and it's backed by a real world asset, and it's helping people, Muslims grow their businesses, many people would want to get access to that kind of investment. But given the regulatory environment, given banking systems, given all sorts, it might not be easy for them to access that. So
Yeah.
that's where tokenization and then the distribution of those tokenized assets becomes key. And that's what we're working on basically, right? And getting those people to invest into.
Yeah. So maybe we should speak in more detail after this call, Daniel. Then, so would this have to be on par value, by the way? So I mean, if we're looking at term financing, right? Debt, Islamic debt, would we be able to trade that? This would be tradable at par value, wouldn't it?
I
Okay.
think there's ways that we could structure that, right? But one way to make it like kind of easier would be that, like for example, a company like Facet interfaces with Codus, where you're buyers of this debt,
Yeah.
and we tokenize that debt, and then we're selling portions of that debt to individuals, basically that are tokenized effectively.
Yeah.
So that could be one way, but we can have that conversation. It's very, very interesting.
Yeah, definitely. Okay. One final question for you both. You've got gold, or let's say tokenized gold, right? And then you've got Bitcoin. Would you invest? Which one would you invest in, or would you invest in both?
Daniel, go ahead.
This is not financial advice, right? Look, I think look, obviously we're very biased. I'm very biased. I believe that there's long-term value in Bitcoin. So I think I would invest mostly, if not all, in Bitcoin, although my wife tells me that I shouldn't do that, and she buys gold and real world assets that are non-crypto related. And she calls them magic beans, which I think a lot of people crypto is. But look, I would recommend that everybody needs to study this. Like there's no every single person on this webinar and everybody else that is interested in fintech needs to understand what's going on, right? And then a lot of people say that, look, it's very risky. There's many issues around it. So just invest a little portion, a portion of your investable income into crypto assets, and in particular Bitcoin. So I would recommend everybody should invest something into Bitcoin. And then if you become bullish on it or understand it and think that it can have long-term value, of course, invest more into it. That's my personal view. I don't know how much percent of Mufti Faz's portfolio is in Bitcoin versus gold.
No, I totally echo what you've said in that I think the greatest investment first in this field is to study and learn and experiment. I think it's really important to put some kind of like, risk capital, something you don't mind losing a percent or two. But only when you engage with something do you actually learn that thing. You have to put some money there. You can't be all theory or just listening to, webinars. You have to experience, engage, and learn how everything works. Then you learn about your own emotions. That's the greatest thing about investing. When you see that volatility, that's when you understand your own self. So investing in this and kind of learning is perhaps the first step I would encourage everybody. Goal is something we're all used to, we're comfortable with for the most part, and that typically forms the portfolio of any investor. A small allocation there. But this is something to experiment and understand and read. And then naturally, your own kind of like allocation, you'll see it change. And you'll begin perhaps to allocate more and more to digital assets, which actually makes sense to you when you see the fundamentals and understand what's happening. And especially the long-term kind of view, it'll give you food for thought.
Yeah, I mean, just personally, I think I agree with you both. I would say invest in both. If you're worried, put a lower allocation to Bitcoin just based on the standard deviation. It's higher, so allocate less, put less capital at risk. Understand it. Once you're invested in it, you're going to look at it differently, and you're going to start analyzing it differently, and you're going to start. Figuring it out, reading more about it, because you ultimately become a stakeholder as well. And then maybe you could take on more exposure as it becomes more institutionalized, as the risk starts to go down. So, I mean, just personally, I think, yeah, I would go for both. I mean, I'm going for both either way, and for different reasons, whether it's gold or whether it's Bitcoin. I'm not really interested in the other ones because I don't really believe in them. But Bitcoin, I've always had an interest for Bitcoin. It's very interesting, especially where it's heading now. With we're starting to see sovereign exposure as well. Just a couple more minutes of your time, please, to go through some of the Q&A. just want to see, some of them we've already answered throughout our discussions. You say that cryptocurrency should not be considered as crypto, but rather as crypto assets. Does that mean? Yeah, this is a question around cryptocurrencies versus crypto assets and whether the Islamic ruling related to currencies sort of do not apply to trading and staking of cryptocurrencies. We didn't discuss trading and staking, but it'll be good to maybe discuss that and quickly.
Yeah,
Yeah.
so I mean, when it comes to crypto, those digital assets which are actually functioning as a payment system. So, for instance, Bitcoin, that's its core kind of utility on its kind of like white paper, electronic peer-to-peer cash system. That's the kind of like heading. So, scholars typically those scholars who have the view that Bitcoin is Sharia compliant and can be used, are of the view that this should be treated like cash as an electronic system, and therefore you give it the rules of surf and so on and so forth. But then the other things, typically, if it's not a payment system, it's like a utility token or an asset-backed token, for instance, then it'll have its own ruling, in terms of like what the utility is or what the asset is.
Okay. And how about yeah, trading and staking? What are your thoughts on that?
Yeah, so look, staking is a very interesting one, where a proof of stake kind of protocol where you are locking up your digital assets, or you're delegating somebody else to kind of validate the blockchain, and you get a reward for that. That's fine from a Sharia perspective. There's many structures that work, like Ju'ala or something that can fit that. There's the word staking is used loosely for other activity as well in the industry. So staking is also used for lending. You'll see people use the word staking for lending activity. That's problematic from a Sharia perspective, of course, when you're actually lending and earning interest. The staking we're talking about is the proof of stake protocol, where you actually have your tokens, you lock your tokens on your wallet, and then you get a reward, a portion of fees or a portion of a token that's generated for validating and being part of the validation process of transactions.
So the reward would be like a hiba, basically.
Exactly. It's like a ju'ala. So it's like an award that's given, like a hiba, for doing the activity by you staking some of your assets. You are locking up your assets, and because you have something to lose now. So you're more likely to act righteously
Yeah.
because you have more skin in the game.
Yeah. Makes sense. Makes sense. One question around, is trading Bitcoin and agricultural commodities using a swap-free account permissible in Islam?
Um, Look, when it comes to, I would say always use a Sharia compliant platform, honestly. Like, there's many things you can be exposed to, and this space is so many unknowns. Like, that's the reality. So I would say go look at a platform which is Sharia compliant, and don't just look at, you get many, like, even in like Forex, first of all, is problematic as a generally, yeah. But you get many of these advertising, swap is interest-free swap accounts, or you get all these kind of like terms. You have to be very careful on what you're doing, and understand where you're trading. Beyond just the asset class you're trading, the services and facilities that you're using are also important to consider.
Okay. I think we touched on this next question around uh we have an anonymous attendee who basically mentioned cash under a mattress, and how does a digital currency apply to that? I mean, as you mentioned, Mufti, the digital I mean, when we're talking about Bitcoin, it's an entry in a ledger. I mean, uh, I just tell this guy, what makes you believe when you go online on your bank account, whether that bank account balance is true or it's just uh, a fragment of your imagination as well. You're not going and doing an audit of the vaults of the bank, right? So yeah, I'm not sure whether you want to add anything else to that, but yeah.
Yeah, I think we discussed this, right? I think what Mufti Fah said was really pertinent, which is physical and like for something to exist does not have to be physical, right?
Yeah,
Our
100%.
our our dreams are real, our imagination is real
I mean,
as
just
well.
think about it. Whenever you're booking a hotel, the first thing you're thinking about is Wi-Fi, right? Typically, everything is about data and Wi-Fi. You walk into a room, first thing is you want Wi-Fi. We are more plugged digitally than physically nowadays. That's the reality that we live
Yeah,
in, the world.
yeah, 100%, 100%. When there are gold-backed cryptos that are Sharia compliant, why is there an obsession with Bitcoin amongst Muslims, despite disagreement among scholars?
I think Hassan, you're the best person to answer that because you're the Bitcoin.
Yeah, 100%, 100%. I mean, it's good to diversify, uh, Abdul Basit. I mean, in my opinion, I mean, it's gold-backed cryptos have got their benefits, uh, and Bitcoin's got its benefits, and I think the disagreements among scholars, to be honest, when it comes to Islamic finance, are on literally on mostly everything. Uh, so I mean, if we go down the disagreements among scholars, I think we'll be restricted to very few Islamic finance contracts to work with, just because there's a lot of disagreements. So I think uh, uh, as long as the disagreements are constructive and there could be good, useful debate, I think we should be able to reach. I mean, it'll be interesting if large organizations. I mean, have large organizations such as the IOFI standards boards, etc., started to discuss digital currencies. It's good to have a platform where all these disagreements can come through and lead to constructive criticism uh, or yield results at the end of it.
I think the Malaysian Sharia Advisory Council are perhaps the first in the world, right, as a national body to issue guidance in 2019 or 2020 on the Sharia compliance of digital assets. And they gave some guidance and guidelines on what makes it Sharia compliant and what makes it not Sharia compliant. So I think that was perhaps a welcome step. And I know that there are conversations taking place in different institutions now, and hopefully sooner rather than later there will be guidance. I mean, like we've seen what's happening in Pakistan, right? The crypto council has been formed, and definitely be a Sharia discussion there at a very high level. So these are all like welcome kind of developments that we're seeing now in across the world, and we're only going to see more of that.
Yeah, definitely. Then there's another question. As a practice in Islamic finance, the volatility of any currency or instrument is governed by the valuation of the underlying asset. So how does this apply to crypto assets or currencies in an underlying project against which it is floated? Uh, I don't. I'm not sure it's governed by the valuation of the underlying asset, the volatility. And I'm not sure that's a requirement in Islamic finance, because we just mentioned Joala, which is basically if we're looking at commercial risk, it's massive commercial risk, right? Like you could use literally a Joala for discovering uh,
Minerals or mines, even. Yeah.
exactly, or developing a new drug or something, and so yeah, uh yeah, I think maybe this is so what do you think, Mufti? Is there some substance to this question, or is it just a misunderstanding maybe, or
Yeah, I think it just needs to be re-looked into and just get a more holistic understanding of that question.
okay. Cryptocurrency is considered the gharar instrument. We mentioned gharar of contracts versus uh
Volatility in price and speculative behavior.
yeah. Uh, Mufti Sahib said in the beginning, what we're talking about, digital assets, not something that replaces the dollar or pound, not the currency. Digital assets is something that can be bound with dollar or sterling. Then you hold on to the value. You can use the digital. Okay, I can always exchange the digital asset for sterling or dollar. Is that correct? Are they interchangeable? I think if there's a market for it, then they are, right? I think that's maybe the yeah. I mean, do you have cryptocurrencies that are like ETFs where you could in theory exchange uh the value of the fund for so in theory you could exchange your ownership in a fund that's backed by gold with the gold itself. So rather than exchange it for cash, exchange it for uh for gold. Does that exist in cryptocurrencies, or is it still entirely digital?
I think there are some projects that especially on the tokenized gold side, which allow you to get physical gold as well. So you can redeem physical gold as well.
Yeah,
Uh,
yeah, that's
possible.
that's interesting. That's interesting. Okay, people with IT expertise can create digital assets whenever and however they choose, like printing notes, create and sell, no control. Is that possible?
I mean, there are people that do that, right?
Yeah,
Mostly those are unbacked meme-based tokens. Unfortunately, there are platforms that have made it so easy for people to launch tokens.
yeah,
Uh, I actually don't even want to say the name so that people don't go on that website and start creating tokens. But it does happen, unfortunately. So yeah, it is possible, but those are not the tokens that, or assets that we're talking about, right? That we believe have value.
yeah, yeah, yeah. Energy is not a tangible, redeemable asset. It simply is sunk cost. How is it valid to claim Bitcoin is backed by an asset energy to make it Sharia compliant?
Let Mufti Faz on this, but I don't think the energy point is what makes it Sharia compliant. I don't think that's what we're saying. That because it's backed by energy, quote unquote, that is Sharia compliant. I think there's also an assumption that it is a sunk cost, etc. But if we talk about the sheer compliance of Bitcoin, I don't think we're talking about it being backed by electricity or energy.
Yeah, no, absolutely. The Sharia compliance comes from its utility and use cases. And that's what it's backed by. It's the benefits that it gives as an entire protocol, as an entire idea. All the ideas connected to Bitcoin is what gives it its value.
Okay, we've just got a couple more questions here. Another aspect of Sharia compliance is in terms of control or ownership. Understand that ownership can be exercised in terms of wallet, but what about controls as it's on a blockchain which is DeFi, decentralized, and there's no control from the regulator. So it's a question around ownership and control, and how this impacts control when it's on a blockchain within a decentralized framework, and there's no control from the regulator.
So that's an extrinsic issue, right? The regulatory thing. Remember, we discussed there's intrinsic issues for Sharia purposes and extrinsic issues. Regulatory oversight is an extrinsic issue, and a government can say that this is not allowed in a country, then you obviously wouldn't be able to deal in that thing. So this is an extrinsic, and this is based on maslaha and like the welfare of the people. The regulators can come in and have a view, and you'd follow that then.
Okay, Bitcoin as a waqf mechanism.
This is interesting. There are like projects now coming to the market where we're looking at Bitcoin being the Waqf asset, right? So it can definitely work if you're of the view that it's Sharia compliant and it's a digital asset. Then of course you can have a Waqf in the form of a digital asset.
Okay. Can the staking coins be fixed, meaning 10 coins staked for each month will generate one fixed coin each month for a year? Is this halal?
It all depends what you're doing and where you're staking, right? I mean, it has to be an actual staking activity where you're validating. The activity is important for Sharia compliance purposes. Like this, what you've mentioned, 10 coins staked for each month will generate one fixed coin. You can have that outcome through a riba contract or through a validation staking contract. So we have to understand what the contract is, what the process is, and then the commercials will look at the outcome as a consequence.
Okay, okay. So I think that's about it. So I think, I mean, this was a very interesting discussion. We're going to post it on YouTube, inshallah, and I hope it helps give a lot of people a good understanding of the different cryptocurrencies or crypto assets out there, and whether they are halal, haram, and we touched on a lot of different questions as well. Uh, throughout our discussion. So, I mean, I'd like to thank Daniel and Mufti Faraz Adam for their time, and uh, I look forward maybe to having another discussion around crypto assets in a couple of years once it's evolved further. Yeah, inshallah, Daniel, as far as Cardis is concerned, I'm definitely interested, and reach out so we could have a separate conversation and see whether now is the right time to turn SME financing into a tokenized asset, basically. So thanks again for your time, and we'll be in touch, inshallah.
Thank you. Our pleasure. Thank you very much.
All right,
All right,
take
all
care.
right, bye. Thank you.